Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, March 20th, and we had a really interesting day staying between the 35 EMA and the 30-minute 200 moving average. So we opened today down. We caught that 35 EMA, and then it was a really quick move up all the way to the 30-minute 200 moving average and a very clear resistance there. So we did have that down gap here as well. Clearly there is a bit of selling going on here. We've seen the bottom of this gap as resistance, and then again resistance today, and today it was paired with that 30-minute 200 moving average. So that was SPY, and in SPX same thing, we dropped down to the 35 EMA. Yesterday we saw that as support as well, and then we immediately popped back up to the 30-minute 200 moving average. And yesterday that was resistance as well. So we dropped down 35 EMA, took it up to the 30-minute 200 moving average. That down gap was right here. We got pushed back down 35 EMA, and we closed just a little bit above that level. Relatively flat today compared to our implied move. We did close down in SPY 0.29%, 0.22% in SPX. VIX came down today 0.5%, and we did close within the implied move. Definitely a theta burning kind of day today. QQQ opened down. We did catch on that 35 EMA. Came back up, and then we saw that down gap and 30-minute 200 moving average as resistance. We closed right at the 35 EMA. Always know where your 35 EMA is. And we did close down here 0.34%, VXN down 1.02%, and here we also stayed within the implied move. We didn't quite make it to the outer edges of the trading range today, so selling spreads probably would not have been a good risk to reward ratio. But if you put something on like a condor the day before, we did have a $3 spread on each side, and you could have sold about 33% of that, maybe 25 the day before. Otherwise, again, this was really a theta burning kind of day. Very choppy, stayed really close to that 35 EMA. IWM, we did open here, down here near the 35 EMA, and immediately brought it up. We did break out above the 30-minute 200 moving average. That is a big move. And then this 35 EMA, look at that, it came right up here. And we are at a critical level here because the 35 EMA, if it does come up, would be a bullish signal. So IWM, if we zoom back out and look just at the moving averages, look right here, this is where we got the cross down. And as soon as this 35 EMA crossed down, we did see that as a resistance, and then a massive resistance here on the way down. So if we do cross this back up, this would be a bullish signal. Doesn't mean that we have to go straight up. You could see here we didn't go straight down. First we tested this 30-minute 200 moving average with the 35 EMA, and then we dropped. So we could see something similar to that if we get this 35 EMA above. Now if we get rejected here, then we could see lower. But this is a critical level, definitely something to watch. IWM closed down today 0.63%. RVX down 2.30%, and we did close completely within the implied move. So starting to see that 35 EMA as a support and trying to reclaim the 30-minute 200 moving average here. Still losing strength on the indicator here, so we'll see how it plays out, but definitely a level to watch right here. DIA, we did open here with a drop down to the 35 EMA. So 35 EMA caught across the board, and then we popped up and 30-minute 200 moving average to the penny today, guys. We stayed right in between these two levels. 35 EMA, 30-minute 200 moving average, back down to the 35 EMA, and we did close just a little bit above it. Now that 200-day moving average is running right across the middle, and we did close underneath that. That is a huge level. There is still a little bit of upward momentum on it, but it is starting to flatten out. So we do need to get above that and start making higher lows and turn that if we're gonna move higher. The weekly 35 EMA also is up here, and that is a huge level. It did start to tilt down. That is a really bearish signal, and especially with that bear gap right above it. So we did close down in DIA pretty flat, down 0.07%, and we did stay within the implied move today. So tonight I'm going to do the trading ranges in the video. I know I've been posting them out on TradingView, but I feel pretty inspired to make an extra long video today. So let's go check out tomorrow's levels. Alright guys, so tomorrow is Friday, and before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. And if you want to help support my channel and you want to look pretty cool while doing it, check out this new line of merchandise I just put out. I don't know how to connect it to my YouTube channel yet. I'm working on that, but I think it's a pretty cool design. So check it out. I do have a few other cool designs coming out too, and I'll keep you updated as those come out. So tomorrow is Friday, and we opened the week right here. And right now we haven't really gone anywhere. We're pretty much where we started on Monday. We've been trading sideways all week, and this 35 EMA has been consolidating back to the 30-minute 200 moving average. So because the last 2 days we've had 35 EMA as support, 30-minute 200 moving average as resistance, those are going to be huge levels in tomorrow's trading range. And let's backtrack for just a minute. The implied move for tomorrow is 559 to 572. 30-day average volatility is much wider, 553 to 578. So that is a $6 difference. And then the implied move on Monday's contract is 557 to 574. So that makes it a $2 spread for tomorrow. And to the upside, that 30-minute 200 moving average is right there. We did see resistance there Wednesday and today. And then right above that, the bear gap, top of the implied move, 572. 200-day moving average, that's a huge level. We traded completely underneath it this week, and also the weekly 35 EMA. That weekly 35 EMA did take a tilt downwards. That is a massive hidden bearish signal. So tons of resistance to the upside, 35 EMA underneath us. And then if that breaks, then 559 is the bottom of the implied move. And you can see that right at that level, we do have a support. This is from Tuesday, right before FOMC. And then on Monday's contract, 557. At the very bottom of the trading range for tomorrow, down by the 30-day average volatility, we do have this up gap. So bull gap at the bottom, bear gap at the top with a heck of a lot of resistance. All right, and then SPX, the implied move for tomorrow is between 5,600 and 5,725. 30-day average volatility much wider, 55.35 to 57.90. Why is there such a disconnect? Because VIX came down significantly since we had these bigger moves earlier in the month. So VIX is under 20 now. That brings our implied move to be much smaller, but that doesn't mean that we can't trade into the extremes here of the 30-day average volatility. The implied move on Monday's contract, 55.85 to 57.45, and to the upside, 30-minute 200 moving average. Wednesday, Thursday, we saw that as resistance, and that was paired with this down gap. That down gap is the next level, and it's just underneath the top of the implied move at 57.25. Monday's top of the implied move is at 57.45. And the 200-day moving average is running through that bear gap with a slightly upward tilt, and that weekly 35 EMA with a downward tilt. So weekly 35 EMA is such a huge level. I'm going to take it out to the 5-year chart. This is the 1-week candle, and you could see that the 35 EMA is a very big support level. In SPX, we have one red candle, and there's a very small window to get back above. And if we do get back above, we go for another run. And then when we come back down, one red candle, and then we get back up. Right here, we had one red candle, then we took it back to the 35 EMA, and then we saw that as resistance on the way back down to the 200-week moving average. So we did print a red candle last week, and today would be our second red candle. So that doesn't mean we can't pop back up to the 35 EMA, but as of right now, I would look to that level as resistance. We also have a red signal line here, and in a lot of ways, it does look like back here where we did see that resistance and then the drop. But of course, here we take it one day at a time. Day trading is a little bit different than these huge time frames, but still good to know where we sit with that 35 EMA on the weekly time frame. And we are, without a doubt, a bit overdue for a touchdown to that 200-week moving average. And of course, don't let that scare you or think too far ahead, because that doesn't happen in a straight line. You can see we had some monster drops, but also monster rallies. So that is SPX, that is the 35 EMA on the weekly time frame, and that is this level. And that did turn downward. That is a huge bearish signal, and that was the upside. So to the downside, 35 EMA is right here. This is on the 30-minute time frame. So there's that weekly one up here. The 30-minute to 35 EMA is the level that we use intraday. Underneath that, we do have this up gap. This is from Tuesday going into Wednesday. So this is FOMC right here. And underneath that, 5,600 is the bottom of the implied move. 55.85 on Monday's contract, and then we have this up gap right here from last Friday. We gapped up, and that we gapped up away from this level, which if we take that out a little bit, that is an uptrend support. This is the 1-year chart. So last year in April right here, then we saw a bounce on that level in August. We are back here, and we gapped up from that level. So we did see a technical bounce on that uptrend. All right, so that was SPX, and let me zoom out real fast. Looks pretty wild. And then QQQ. QQQ, tomorrow's implied move is 473 to 486. 30-day average volatility is quite a bit wider, 464 to 494. Again, that's because of the volatility crush we saw. Monday's implied move is 470 to 488. And to the upside, we have the 30-minute 200 moving average. We have been consolidating back to that level. So we have been making some higher lows and higher highs, getting back to that 30-minute 200 moving average. We're still bearish here at the moment because this 35 EMA is underneath, but look at that level right here, 30-minute 200 moving average. Ever since we dropped that 35 EMA underneath, we saw that 35 EMA as resistance, and then once we started making those higher lows, higher highs, we've been bringing it back to the 30-minute 200 moving average. So it's going to be a battle zone. We've seen it as resistance all week, and it is just above us and in tomorrow's implied move. So it needs to be in your trading range on your chart because it is within the implied move. So we did see a resistance at the next level, which is that down gap that is from last week, the opening gap from last week, and it has been a resistance this week. So that lines right up with the top of the implied move at 486. That is where we have resistance with that 30-minute 200 moving average. Then above that, 488, top of the implied move on Monday's contract. And then at the very top of the 30-day average volatility, we do have the 200-day moving average. Right above that, that weekly 35 EMA, that's a monster level. And paired with that 200-day moving average, that could cause a lot of damage. And then to the downside, 35 EMA. This is on the 30-minute time frame. That is straight across the trading range. If we break it, look right down to 473. That is on tomorrow's contract. Monday's contract, 470. And if all of that breaks, our next support is right here at 448. That would be a heck of a drop. That's not even close to tomorrow's trading range, but just putting it out there that if we see weakness here tomorrow, if we see this 35 EMA rejected at the 30-minute 200 moving average, this is where the next support is. All right, IWM, implied move here for tomorrow. Let me put those numbers in. There they are. I must have just skipped over that one. So tomorrow's implied move in IWM is 202 to 208, 201 to 209 on Monday's contract, and the 30-day average volatility 199 to 211. And we're at a very interesting level here in IWM. This is a make it or break it level on this time frame. 35 EMA came up to the 30-minute 200 moving average, and you can kind of see it started to turn away. So we could see a rejection here, especially since strength is falling. But that is an absolutely huge level. And basically those are the two levels in our trading range tomorrow. We don't have anything else. So if we break this 35 EMA up, that is a bullish signal. And then the top of the implied move is at 208 and 209 on Monday's contract. 1 hour 200 moving average is coming down at a pretty strong angle. That is going to be resistance. Underneath us and really just flat across is the 35 EMA. So those two levels again, if we do break it, 202 is the bottom of the implied move, 201 on Monday's contract, and the next support we have is at 198. IWM has been doing an amazing job of closing within the implied move. All right, and DIA. DIA, the implied move for tomorrow is between 416 and 424. And the 30-day average volatility is 412 to 428. So $4 wider. That is significant. And tomorrow's trading range is pretty crazy. 30-minute 200 moving average. Sorry, that's 30-minute 35 EMA. We have seen that as support since last Friday. And that did bring us back up to the 200-day moving average. We're underneath the 200-day moving average. And we did mostly trade underneath it this week. We did get above for FOMC, and then today when we bounced on the 35 EMA, took it to the 30-minute 200 moving average, but back down. We are making some higher highs here, but lower highs down here. So just be mindful that we are losing strength around the 200-day moving average. Right above that, 30-minute 200 moving average, resistance today. And above that, that weekly 35 EMA starting to point down. That is a huge hidden bearish signal. Don't underestimate that weekly 35 EMA pointing down like that. So there you have it, guys. Let's see how we close this week. Have fun tomorrow. Trade safe. Make sure you take profits when you're up. And I will see you guys on Sunday night.